The higher for longer tailwind, net interest income boosting Bank of America's third quarter profit. It follows on from a similarly strong showing at JP Morgan and Wells Fargo. Wells and Citi both boosted their view on net interest income for the full year. Trading also a bright spot for B of A and Citi in the period. Another big bank very dependent on that unit performing is Goldman Sachs. Bond trading revenue there falling 6%, but it did come in at $600 million above Wall Street's expectations. So altogether, how do these numbers look? Let's get Dick Bove's take on this. He's Odeon Capital Group financial strategist. Dick, it's great to see you here. So let's first start with Goldman. I know you're closely watching these results. Profit down significantly on that year-over-year comparison, but we did see the bank beat the street's expectations for the current quarter. What's your takeaway just from these results and what that tells us about Goldman's position heading into the end of the year?
Well, what I'm trying to do is separate out the, let's say, ongoing businesses from the one-time charges businesses, okay? The ongoing businesses actually look reasonably good. And I think that there's a good reason to feel that, the M&A sector is going to improve somewhat. And if the market stays where it is, you'll continue to see an increase in equity offerings. Plus, I think that, the rapid change in interest rates has forced, corporations to do a lot more borrowing, near term. So I think that their ongoing businesses, the ones that are most important, obviously, are doing well. The company's problems are all associated with write-offs that they're taking in businesses that they're trying to extricate themselves from. They made this decision a few years ago that they had to get more recurring revenue streams in the company. In other words, they had to get more, stability in their earnings flow, and they would have to get, therefore, more loans. They would have to increase the assets under management. They moved too rapidly. They made mistakes in the way they were moving, and therefore they're now writing that off. But if we're in 2024, what will be there? They won't be writing off, GreenSky. They won't be writing off, a variety of, commercial real estate investments. They'll be doing their traditional business, trading and investment banking. So I actually think that Goldman Sachs is on the right path at the current moment.
What would you like to hear from the leadership team right now to signal that they are clearly out of any type of kerfuffle or consideration around a changeover at the executive position with DJ D-Sol, as we called him before, but of course the CEO of Goldman Sachs, David Solomon?
Well, I think this is the more, let's say, amusing situation here. Bank of America at one point had gotten rid of 125,000 jobs. Wells Fargo has fired every person in the top, if you will, 25 executives at the company, and they've gotten rid of thousands of jobs. You take a look at each one of the, even Morgan Stanley, each one of these large banks have been firing people, pretty aggressively. And each time that they fire people, they get accolades for it. The market loves it. Wow, you're reducing expenses. Goldman Sachs actually increased the number of people that it hired, that he had on board in the last couple of years, and now they're firing a few hundred. It's just amazing. This guy's personality has so overwhelmed, rationality that people think that something at Goldman Sachs is happening, which has not happened at all of their peers. In fact, Goldman Sachs has not fired as many people as any of their major peers. And, I think given his reputation, I don't want to work for David Solomon, but the fact of the matter is that, he may have an abrasive personality. It may be the Goldman Sachs people have access to the press and they get very upset, and they call the press, whereas, 125,000 people that will let go at Bank of America don't call the press, and every time they fire another 5,000 people at Bank of America, Brian Moynihan gets praised for it. So it's hard to understand why people think that something is going on at Goldman Sachs that's different than the other major banks. Jane Fraser a couple of days ago said that they were going to be firing a lot of people at the Citigroup, and her very words were, "I'm fine with that." And everybody thought, well, that's wonderful because we want you to fire people at Citigroup. Why don't you want people to be fired at Goldman Sachs? I don't know. So I think it's overhyped. I don't think it's any different than what we're seeing at the other major banks, and therefore I think it will gradually fade as an issue in this company.
That's already started to fade just a bit, I think we could say, over the last couple of weeks. But Dick, let's also talk about what we just got here from Bank of America, because when you're comparing Bank of America right now to Goldman Sachs, a totally different story, right? We know the stock has been under significant amount of pressure, shares right around that 3-year low that hit earlier this month. When it comes to the consumer potentially slowing, which was some of the words from CEO Brian Moynihan, what does Bank of America need to do in order to turn its business around? And do you see that catalyst coming anytime soon?
I think Bank of America is in deep trouble. I think it's a company which needs a significant influx of common equity. I think that it has locked itself into yields which are substantially below the market. And I think that what they've done here is so bad that the CEO of the company should voluntarily give up his pay. This stock is selling at the same price it sold back in 1997, and it's selling at a discount of roughly 20% to book value. There is a reason for that. The reason for that is let me stop by and say, I think that Brian Moynihan is a brilliant operating leader of his company. I think, however, he has no concept whatsoever of what rising interest rates mean to financial assets. I think that he has no concept whatsoever of what it means to buy back $85 billion in stock. I think that they have mismanaged that balance sheet to such a horrendous extent that now they're going to have to take a couple of years to figure it out. If you take a look at just two parts of the balance sheet.
Dick, just quickly, let's jump in here real quick. What would you have liked to see them do instead? Because there were a lot of other banks that kind of took some of the similar actions here with their own balance sheets. And what would you like to see in a new leader? Who is the new leader that you would like to see instead of Brian Moynihan then?
I'm not saying that they need a new leader. I'm saying they need new financial management, from the CFO all the way up to the board of directors. But about 5 years ago, when they started doing what they're doing now, I began a series of conversations with the bank indicating that they simply didn't understand the importance of capital in a banking company, and therefore that their policies would lead to significant problems. The discussions in that 5-year period got so heated that a couple of years ago they refused to take my phone call, and they refused to respond to any email related to what they've done. Now they've changed that in the last couple of months, but the fact of the matter is, what did I tell them 5 years ago? Forget what I'm doing in terms of being a Monday morning quarterback. 5 years ago, I said, you cannot buy back this amount of stock because you're reducing your secular earnings growth by doing so. 5 years ago, I told them, you cannot lock yourself into, held to maturity security positions at yields which are substantially below the market, because ultimately you can't get rid of those securities. You got, as I say, you've got $1 trillion in securities and home mortgages, and throw on a few auto loans, which are yielding 2.45%. Why would you allow yourself to get into that position? Why weren't you hedging positions? Why weren't you doing what we said 5 years ago and we wrote 5 years ago? So we're not talking about, oh, gee, now we're looking back and saying, they should have done something wrong. They were told repeatedly that the direction that they were going in was going to be destructive to shareholder wealth. So shareholders are not making money in the company. The heads of the company, however, in that period have made a few $100 million.
All right. We're going to continue to track shares throughout the rest of the day. Of course, as we mentioned to our viewers, the call is going on right now, so we're going to continue to monitor to see what is said from the executives over at Bank of America. Dick, thanks for taking the time here this morning. Dick Bove, Odeon Capital Group financial strategist. Thanks so much for taking the time.
All right. Thank you.